Paul, let's start with crypto, shall we, and Bitcoin, because we are watching to see whether it gets to 100,000. And there seem to be a lot of reasons to be optimistic in the views of crypto investors, crypto buyers, about the outlook for crypto in the United States and a new regulatory regime. Do we have any sense of what's already priced in and how much higher this goes?
Great question, Anna. With Bitcoin, you never really know. There have been significant inflows already that have been pushing that price ever closer to 100,000. We've seen it in the ETFs this week. We also know that there's a lot of options clustered around the 100,000 level, which may be a bit of impediment in the short term to it breaching that level. But were it to punch through, you could expect perhaps there to be some added momentum behind it once it gets there as well. As you said, plenty of reasons that the market is excited and optimistic about this. We hear that Gary Gensler will be leaving. He's been seen as a sort of negative, or at least a skeptic over crypto, holding it back. If there's less regulation related to crypto, then maybe the market gets more buyers and the bandwagon carries on rolling. Likewise, some excitement over the possibility of the US administration introducing some kind of crypto czar too. Things can unwind pretty rapidly as well and have big checks in crypto, as we know. But for the moment, the momentum seems pretty firmly there and people still joining in, getting hold of that rally.
Paul, the momentum in Europe and in China feels like it's moving in the opposite direction. Let's start with Europe. How grim does the picture look, and how is the data that we're going to get this morning and Christine Lagarde's speech shortly going to inform us of just how bad it is?
Yeah, you probably have a better handle on that than I do, Guy, but it certainly doesn't look all that pretty from over here. You know, the PMI's kind of just rolling along in the same kind of direction, with manufacturing still looking very depressed, services not all that shiny either. The good news is that brings down inflation expectations, looking at five-year inflation swaps right on the ECB's target now, just above 2%. So that can encourage the ECB to keep on cutting, which will, yes, it will undercut the euro, which we've seen a lot of pressure there recently, but it should support the economy a little bit more going forwards. The other thing to keep an eye on is energy prices going into the winter, of course, and whether the Ukraine-Russia tensions there continue to ratchet up natural gas in particular.
Yes, I note that the gas price up just 1% this morning, but a substantial rally yesterday. Paul, let's talk about China, something a little closer to where you are. The overall story from Asia was sort of flat to positive this morning, but the China story really negative. Once again, the market, just worrying about a lack of stimulus measures or a lack of detail around them?
Yeah, that's it. But where it's coming from this time is the corporate earnings, Anna. Actually, retail sales data has been picking up a little bit recently, but you wouldn't know that if you're looking at the sort of tech supermarket companies, which have had a real stinker. PDD, for example, down 10% in the US trading overnight, really feeling that pressure. And they don't have very many ideas. They're in a very competitive environment, not much more coming through. So still lots of pressure there.